2021 has been a wild time for money, and we at Money Always Talks wanted to share our picks for this year's most consequential financial stories that are sure to carry into 2022.
The S&P 500 closed at an all-time high today.
Our first pick has to do with the American dream, which usually goes something like this. No matter who you are or where you're from, if you work hard and manage your money right, you can reach your financial goals and achieve stability and happiness. But in recent years, 2021 especially, a key part of that formula is increasingly out of reach for many Americans: buying a home. It's not just New York or San Francisco that are priced astronomically. In many markets, both big and small, the ability to buy a house has become increasingly difficult for the middle class. This denies one of the most surefire ways for a family to build wealth over time. Essentially, there's a national housing shortage at a time when a lot of people want to buy. This creates bidding wars, which then drive up prices well beyond advertised prices. Usually the people winning out are the ones with plenty of cash on hand. And then there's the competition from financial firms and high-wealth individuals, who are able to purchase homes at higher prices with ease compared to the average family. Usually, they're buying with the intent of making rental income or selling the house later at a profit.
Price appreciation last year nationwide was up about 19%, according to the Case-Shiller Home Price Index. The average used home, the pre-existing home sales, the median price was up about 15% and is now $361,000. So if you were to get into that with a traditional mortgage requiring a 20% down payment, you're looking at $72,000. And with a lot of the McJobs that are out there, people have a pretty difficult time given the higher rents they're facing year over year, which are up also about 15 to 20%.
Our second pick runs parallel to the ultra-competitive housing market: rising inflation. This has made everyday goods more expensive. You're probably feeling it now at the grocery store or at the gas pump. That's because the Consumer Price Index, a measure of the average change over time for prices paid for a number of goods and services, went up 6.8% in November compared to a year ago.
That is the highest rate since Rick Springfield was rocking people with Jesse's Girl in 1982, 39 years ago. And a lot of similarities persist between now and the late 1970s. In the late 1970s, we were dealing with the repercussions of having spent billions in Vietnam and then spending billions at home in social programs, much in the same way we have spent trillions in Afghanistan, Iraq, and all over the world. And we also decided to expand all kinds of benefits.
It also doesn't help that we are facing supply chain delays and labor shortages. Up until early December, the Federal Reserve said this period of inflation was transitory. Our third pick ties into some of that market uncertainty, but it's also just so hot right now: the rise of cryptocurrencies and blockchain technology. What was once largely confined to people in the know became household terminology around the world. Even your most technologically unsavvy friends and family probably have some idea of what Ethereum or an NFT is by now.
Why this year was it such a big thing? Because you had the legitimization of it in the mainstream media, and because it was working. You know, it was on its back. I recall back in July of 2021, Bitcoin was below $30,000, 29 something, 28.9. And it got as high again as the low 60s, mid 60s. And then it tumbled back to the 50s, and it's seen a significant correction now too. But people tend to flee to assets that are scarce in times of inflation. So I think that like gold for millennia has existed as a store of value in uncertain monetary times, people look now to Bitcoin and Ethereum and other currencies and contracts and stable coins as a place to go when risk is high.
Pick number 4 also has to do with high-risk assets and internet culture. We're talking about meme stocks like GameStop and Wall Street Bets. The battle between hedge funds and retail investors put the market into tailspin at the beginning of the year. It's not really clear where this goes from here. Both GameStop and AMC stocks remain well above their prices before the surges, but have also dipped significantly from their peaks.
It is amazing that for 12 months, the trend is more or less persisted, but you can see in late November, it was 250, and now it's down to 150. So 40% decrease in value in just about 4 weeks is That's pretty intense. Looking over at AMC Entertainment Holdings, they were kind of smart. They realized the opportunity when their stock went viral and through the roof from like $9 up to in the high 60s, I think it was. Yeah, $65, $67. They're at 25 now, though. Still up a multiple of about 200% from where they were a year ago.
Our last pick for 2021 is when millions of Americans decided to partake in what is commonly called the Great Resignation. In September, a record 4.4 million Americans quit their jobs. There's plenty of debate around the name of this phenomenon, exactly why it's happening, and even how widespread it really is. But what we do know is many people across the country are reconsidering the kind of work they want to do and whether or not their current employers are offering them fair pay.
Well, unemployment is down to 4.2%, and that's lower than it ever was during the boom times that, were earlier in this decade. So labor is scarce, and companies are having trouble getting things produced to sell. And of course, shipping is a problem too, but in every industry, from home building to trucking and consumer, restaurants, things like that, other consumer-facing industries like grocery stores, they're dying to hire people. More people are quitting their jobs because there's higher wages out there. And if you're not getting treated well in your job that you have now, this is when the iron is hot and you got to strike.
The common denominator to all of these stories is, of course, COVID-19, which we figured you've heard enough of already this year and don't need more from us at Money Always Talks. But as new restrictions and lockdowns are once again taking place, we'll keep tabs on how the markets and our picks react in the new year.